Dave Bechtel, one stock you like in the Barrrow Street long-short opportunity fund is Gentex. Now, this stock really popped last week. They beat the street on the top and bottom lines. They make rear-view mirrors, so looking ahead, what's going to take the stock higher?
Looking through the windshield, as it were, it's a great company. It really has a hammerlock on the rear-view mirror market, and it's a much more technical product than a lot of consumers realize. There are all sorts of meters in rear-view mirrors now to dim lights and give you the temperature, and there are safety considerations as well. So these guys have intellectual property in what seems to be a pretty simple product, and they're the dominant supplier to the U.S. auto industry. So if you think that our consumer-led housing and automotive recovery is going to continue, this stock should perform well.
Well, consumers also buy cigarettes, and you also like Reynolds American. Now, this stock's up around 13% this year. Also pays a nice dividend, about 3.2%. Yeah. They report this week. What are your expectations for Reynolds going forward?
We think year-on earnings is going to be between a 15 and 19% increase in EPS for the year. In fact, that's the same as management guidance. This company is a cash cow, Greg. They are looking at 30% operating income growth year over the last 3 years. The last year alone was a 50% increase in operating income growth. They have wonderful margins, about 50%, 50% operating margins, and you can buy the stock at a 14% cash flow yield. It's dirt cheap. Cigarettes aren't going out of style, and yet if you hold the stock for about 6 years, you get all your money back and the rest of the company for free.
All right, well, cigarettes may not be healthy, but Whole Foods, another stock you like, offers healthy offerings on their shelves. This stock's been flat year to date. They report earnings this week. When you look at the stock, it's basically bounced between about 29 and 35 for a while. So it's been fairly volatile too, but it's trading at the top of the range. Yeah. When's it going to break out and move higher?
You know, they're in build mode still. This is a company with a wonderful brand. We all know what Whole Foods means. They're the leader in organic, healthy eating. It's a hard stock to understand for a lot of analysts because about 20% of their revenue comes from the prepared food aisle. So they're kind of a restaurant in a way. And the business plan is to get Whole Foods to be a place where you want to linger. Share a story with a friend, have a cup of coffee. They're putting in cafe formats. So when you're building like this and at such a rapid pace, it's hard to see the margins and the returns on capital as they truly are. The minute Whole Foods says, we're done for now, you're going to see amazing improvements in all of their operating metrics, and the stock's going to take off.
All right, then finally, Brown Forman. So why should an investor want to take a slug out of the Jack Daniels maker?
You know, Jack Daniels is the oldest registered distillery brand in the United States of America. It's a premier marquee name, and about half of the business that Brown Forman does is offshore. That's where they're finding growth. This stock's cheap because case unit volumes in the U.S. are pretty flat for most of the bigger players in the spirit space. And when you look at what Brown Forman's doing, they're taking this iconic American brand and they're using it to spearhead overseas penetration in emerging markets. When you're at a bar and you order a drink, a lot of people order a branded liquor to convey an image about who they are to their friends. And there's nothing more powerful than Jack Daniels to say, I'm savvy, I understand the world market, I like this fancy American brand. Makes people look good.
Yes, I have felt the power of Jack Daniels. Thanks a lot, Dave.
Thanks.
And thank you for watching The Street.